Hey guys, Adam here from DirectionTrader.com. Going to do a quick video here on how to limit your risk when trading Fibonacci's, and if you got a smaller account, how you might enter a Fibonacci level to limit your risk, or enter with a lower risk. I guess I mean to say. Let me jump right into this. I'll show a couple examples. I was showing this in my live trading room to a couple gentlemen today, but basically all I have here is two different time frames. I have a faster time frame of a 233 tick and then a slower 1600 tick chart on the ES. I got the fibs all set up here. So let's say we drew from an obvious low to a high and it pulled back. Now what we're doing is we're looking for the 50% retracement on each level. Using the two time frames, this pullback is this exact same level. So that's what we're looking at. We're just looking at two different time frames. Now, a couple of things here. If you were to enter at the 38%, the dashed yellow line, then have your stop below the 62%, then on this particular situation, we're looking from about 1463 down to about 6150 if it breaks. So you're looking at about 6 ticks. Not a lot. It's 6 ticks though. Now how would I enter that position and have less risk than 6 ticks? So I'm talking to the individuals out there who only have a couple $1,000s in their account but still want to trade these longer setups, but just get into them with a little less risk. Let's go over and show the exact same time frame. This exact level is right here. So basically what we're looking at is we're looking for a pullback and we're looking for it to head up. So we're looking for this market to go up. So what am I going to do? I'm going to use this exact low and I'm going to draw a micro fib doing the exact same thing, but this here I'm going to enter here at 63.50 and now my stop's right here at 52.75. Now the individuals out there who are traders are going to say, man, that's crazy. That's only a 3 tick loss. And you're right. That is a 3 tick stop. That's as tight as I've ever seen. But what happened is we are now into this exact same trade to the long side with less risk. Not a bad idea, right? A lot of people are going to be like, that's very interesting. So let me just find another quick example. We'll take from that exact low again that we just used, or no, we use that exact low that we just used. Draw it on up. So let's move forward here to the exact same time. All right. So what we're looking at is a low point and a high point. Draw a fib. Our entry, yellow dashed line, 38%. That low happens to come right here, same exact area, different time frame. So on this particular example, we're entering up here at 65 3/4. So you're looking right up here. We're entering at 65 3/4, and our stop is below the green dashed line, 64. So now we're looking at 7 tick stop. 65 3/4 and 64. That's 7 ticks. 7 ticks of risk on this particular example. Let's move over to the exact same time, the exact same trade on a smaller time frame. Do our fibs. Everything's the same. We're doing the exact same thing, just with the smaller time frame. You have this low, you have this low, but this time we're waiting for confirmation. We want to see this longer setup start to trade up. Once this trades up, it pulls back to our fib. On this particular example, looks like we're entering at anywhere from 66.25, let's say 66.25. And now our stop is below the low here at 65.75, 65.50. So once again, on this example, we have a 3 tick stop. Over here, we got the same chart, longer time frame, 7 tick stop. Over here, we have now waited for confirmation for this to go ahead and show us that it wants to go to the upside and limited our risk. Pretty neat. Not many people look at that. They look at this longer swing, which I do too. I do take setups on longer swings because I can stomach a little bit more risk. But the individuals out there in my trading room don't like to have above about a 5-tick stop because it's just too much of a risk. If something did happen, they got stopped out. So now what they can do, they can now officially wait for confirmation. They can, on this trade here, they're now officially waiting for confirmation because it's already heading up in their favor to the upside, and it's pulling back, and they're at a smaller risk. They are loving it, and now you got the exact same trade to the long side. Same targets to the long side. Pretty neat. So, use a lot of Fibonacci's in the trading room here at DirectionTrader.com. Come join me. My name's Adam. You'll see me in here in the morning times for at least the first couple hours of trading. We use a lot of fibs, trade a lot of the ES market, a little bit of Russell, gold, crude, YM, but we mainly stick to the S&P 500 minis and use a lot of internals on a lot of fibs. So if you're very interested in what I just showed you, there's so much more. So come to the live trading room, and I will be explaining these in detail every single day. So my name's Adam. Come to DirectionTrader.com, and I will talk to you soon. Have a good day.